Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 30th of December. Euro jumps amid thin liquidity conditions. The common currency spiked higher against its major counterparts during the Asian morning without any major fundamental driver behind the move. Thin liquidity conditions may have played a large role in pushing the euro higher, evident by the fact that the currency gave back most of its gains in the following minutes. Some end-of-year portfolio rebalancing or year-end short covering by investors may have played a part as well. Considering that the next few days are likely to be characterized by thinner than usual liquidity, as some markets close early today and most markets will remain closed on Monday, we could see similar unexplained spikes across currency pairs. Euro and dollar emerged above the 105 barrier, but the spike triggered some selling orders slightly below the 10670 resistance, and then the pair retreated. During the early European morning Friday, euro-dollar is trading slightly above the 105 mark, where a dip will bring the rate back within the sideways range between that level and the 10360 key support. Despite the latest surge, we maintain the view that the medium-term path of the pair remains negative. The price structure on the daily chart has been lower peaks and lower troughs since the 9th of November. So this enhances our view that the bears are likely to remain in charge and bring the rate back below 105 soon. A dip below 10360 would confirm a forthcoming lower low on the daily chart and is possible to open the way for the 102 zone. Gold prices also showed up yesterday heading into the London closing. Like the move in the euro, there was no clear trigger behind the surge. The precious metal broke above the resistance, now turned into support barrier of 1150 to hit the 1164 resistance line. In our view, given that the price is trading above the prior downtrend line taken from the peak of the 17th of November and above the new short-term upside support line, we would consider the short-term outlook to be positive for now. We'd expect a clear break above 1164 to initially aim for the next resistance of 1173. As for the longer term outlook, we still believe that the break below 1300 on the 4th of October has signaled a medium term trend reversal. Since then, the price structure on the daily chart has been lower peaks and lower troughs, which enhances our view. As such, we would treat the short term recovery or any possible extensions of it as a corrective phase of the broader down path. As for today's indicators, during the European day, the economic calendar is empty. The only noteworthy indicator that we get during the day will be the US Chicago PMI for December. Expectations are for the figure to have declined somewhat, but to still remain well above the critical 50 mark, which separates expansion from contraction. Although this indicator is usually not a major market mover, in such a quiet calendar day and in thin liquidity conditions, it could give the bears an excuse to push the dollar a bit lower. Markets will close early in the UK and Germany. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.